Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Wednesday, September 24th. Well, firstly to the S&P 500, and here we see the buyers coming back into the market quite strongly, taking control by closing up towards the highs, but being unable to breach the important round number 2000 level of previous support and resistance, a very important area here, and also being unable to close up above the Tenkan-sen indicator. So some important trading coming up over the next day. Will the buyers have built enough momentum to breach that area and establish a new major high? If we look at the last time we had a similar candle, very similar type of trading activity, with the market opening down towards the lows, the buyers coming in control, unable to breach the 2000 level, closing quite close to there, and then the trend establishing itself and trending up for 3 periods. Both of those uptrending candles were fairly weak candles, but the thing here is, and the important thing is, the large white body and the attempt at the buyers to build net momentum, and it does suggest that there is a good possibility of the market breaching that area. Now, if we do see the market come off, then we could see support down around the lows here of these two candles, roughly about the 1979 area. Just looking at our bands here, and here, if you recall, yesterday we had the bearish breakout to the downside, and this highlights how important it is to get confirmation of these breakouts, and we don't just watch them blindly. The bearish breakout here suggested that we had a strongly downtrending market, but we want to be a little bit more sure of that, because we can have false breakouts with the Bollinger Bands, and Bollinger called them the head fakes. We still can have a false breakout even if we get that confirmation, but we have a little bit more certainty that the trend might develop. But here today the market has closed back within the band and found resistance at the middle of the band, which is a normal thing for the market to do. So some important trading coming up over the next day. Will the market be able to breach the middle of the band? If it does, there is potential resistance at the top band at 2005. Next, we'll take a look at a few sectors, and just looking at the healthcare sector, a bullish market in all three timeframes on the daily chart. We have the market bouncing off support at the Kijun-sen indicator, and the bullishness is supported by the Chikou span. A very solid bullish candle, and looking at relative strength comparative, we are now continuing to trade back outside of the upper band on the relative strength comparative to the S&P 500. It does suggest that this is a strong market relative to the overall index, and watching volatility here, we are at a cyclical low, and if we see continued price activity, and I suggest if we can take out the peak very close by, then we could see volatility begin to tick up and this market continue trending up on its way. A few stocks now, and the first we're looking at is LinkedIn. LNKD is the code, and about a week and a half ago we saw a strong bearish breakout down below the Kijun-sen and the Tenkan-sen. The market hasn't recovered from that. We do have a bullish market in the longer term time frame, but trading above the Ichimoku cloud. But look at the relative underperformance, trading down below that lower band on relative strength comparative, and suggesting that this certainly is now a stock that we wouldn't be allocating to. We do have volatility beginning to tick up as we see some very weak downtrending price action, but a lot depends on this current candle here. If the buyers have found enough momentum to trade the market to the upside, and we will be watching potential resistance around the Kijun-sen indicator at roughly about the 218.50 level.